friends, welcome to my channel, The Trading Couch, where we learn and earn together. This is another episode of the end of the day chart analysis, and today we got to see a rare phenomenon of Nifty having a mirror image of the previous day session. That is, if you neatly observe, the way Nifty went up, the same way it came down. So you can see somewhat a formation of a head and shoulder pattern. That is, clearly a head and shoulder pattern. It is given a breakdown. So we can expect the coming days for Nifty to go down. Today the trade was quite simple, and it was a textbook example of the CPR theory, a trend line theory, and the pullback theory. So let us go into the playback of the candles and see where we could have taken the entry and how we could have made profit from today's trade. If you see here, the second candle formed a rejection from the previous day high, and it was a bearish signal of almost engulfing 1 2 3 4 5 candles, previous candles. So this displayed bearishness in the market, and that too getting rejected from the previous day high is a strong signal. But still, since we had a wide CPR, we had to wait for a proper breakdown of the CPR, a proper pullback, and then take an entry. So let's see how the market played out. Here we can see that there is a rejection from the EMA near the CPR, but still we have a CPR as a support, and this wide CPR can any time and any day act as a support unless we get a proper pullback and a proper confirmation. And this area also happened to be the previous a demand zone where we had a sudden spike with two bullish candles. Hence we cannot take a risk of shorting at this position. So let's wait for proper confirmation. Now that we have got a clear breakdown and a clear confirmation that the price is going to be on the downside, so here we'll have to wait for a proper pullback towards the CPR and then take the entry. So here, looking at this pattern, one can say that this is forming a double bottom pattern. This would not be valid because the CPR will act as a strong resistance and strong support. Unless this double bottom pattern is breaking out from the CPR, it would not be recognized as a valid double bottom pattern. See, here we can see that formation of a trend line here, that is the price trying to take support from a trend line. So whenever this trend line is broken towards the downside, then that will be our entry. So this is nothing but a bearish flag pattern or wedge pattern, whatever it is called. So here, whenever this pattern is broken, this is almost like a signal of profit booking and new players, and once this is broken, then new players enter. And since the rejection happens near the CPR, it will be a more valid entry for us. See, here we got a valid breakdown. So our entry would be 50% or 30% of this breakdown, and a stop loss will be above the previous day, and we can take 1:2. So thus our target is hit, and we can see that that was a clear a textbook example of a bearish movement where it takes a proper pullback and then continues the downward momentum. And we can also use Fibonacci here, that is from the high of the day to the low of the day. If we take, and wherever the 50% rejection happens, so see here, it is a perfect example of Fibonacci, how Fibonacci tool is used. If you see this exactly near the 50 to 30% or the 60% area, there is a rejection. So this is a valid rejection area, and gives a added confirmation for traders to go in the direction of the market. And as the day progressed, at the end of the day, the stock almost closed near the low of the day. So this shows a strong bearish signal for the index. And as I keep telling my viewers that the virgin CPR or the CPR is one of the strong concept or the strong areas where the price is attracted towards. You can see that this virgin CPR has been near the gap area and the price is generally attracted, and if you further go down, there is this one more virgin CPR which is perfectly in coincidence with the gap area. So this would be a zone which we have to watch out for, and the price will head towards it and try to fill this gap and test the virgin CPR, and if at all it reverses, it has to reverse from this point, and once if it breaks, then it's a bad news for the index and it will continue to fall further. And to justify this, I have my view from the 1 hour time frame as well, and here you can see formation of a double top. So if this continues, it has to come here, fill this gap, and if at all there is any strong support or strong buyers in this area, then the stock has to move, the index has to move up. If there are no buyers, then it would be a bad news, and the index might continue to fall further until its next support area. Okay, so this would be the view. So hence I ask my viewers to be cautious and stay careful in the market before taking any long position. Wait for a proper confirmation and then enter into. If you like this video, please give a thumbs up, subscribe to my channel, and your support is precious. Thank you.